So, ich begrüße euch zum Livestream. Gleich geht es los. 14:15 Uhr gibt es den Begleittext von der EZB, das Kurzstatement. Dann eine halbe Stunde später die Pressekonferenz. Ihr seht schon im Hintergrund, geht dann auch los. Übertrage ich wieder live und werde diese dann live in deutscher Sprache moderieren und begleiten. Was ist zu erwarten von der EZB? Im Gegensatz zur FED wird es sehr wahrscheinlich eine Zinserhöhung geben um 25 Basispunkte. Dann aber wieder ähnlich wie zur FED, wie Jerome Powell, wird man dann vermutlich auf Sicht fahren wollen. Man wird sagen, man braucht weitere Schritte, wir sind noch nicht zufrieden, wir sind noch nicht am Ziel. Na, die hawkische Begleitung wird dann wieder liefern und weitere Zinserhöhungen ankündigen. Ich persönlich gehe davon aus, dass es noch eine weitere geben wird, aber im Sommer der Pivot sehr wahrscheinlich wird, weil die Inflation doch signifikant nach unten fällt. Kerninflation muss man beobachten, aber es gibt doch deutliche Fortschritte und im Gegensatz zur FED ist der EZB-Rat doch sehr dovischer geprägt. Also gibt es sehr viele Tauben, die für eine lockere Geldpolitik unterwegs sind, gerade die ganzen Südstaaten, die natürlich aufgrund ihrer Schuldenproblematik alles andere als hohe Zinsen gebrauchen können und die werden um ihr Gehör bitten und Druck ausüben, auch wenn das heute noch nicht erkennbar sein wird. Also 25 Basispunkte wahrscheinlich von 3,75% werden wir auf 4% Leitzinsen steigen, werde das vor wenigen Jahren noch erwartet. Ist trotzdem schon eine Hausnummer, ein Zinsschritt dann noch möglich. In der Summe dürfte Lagarde ziemlich in den Erwartungen liegen, die Markterwartungen treffen. Die Börsen reagieren momentan schwächer, DAX schwächer unterwegs, hatte ich ja heute schon kurz angesprochen. Der muss bullish konsolidieren am Allzeithoch, ansonsten ist auch die übergeordnete Supportzone wieder fällig. Und mehr kann man natürlich dann auf tradingportal.net und Trading-Chat schauen. Die US-Future auch sehr schwach unterwegs, aber die sind heiß gelaufen, die brauchen eine Konsolidierung, das haben wir schon zum Market Briefing besprochen und die kann durchaus im bullischen Muster verlaufen. Der Dow Jones hat es schon aufgegriffen im bullischen Muster. Es darf nur keinen starken Abverkauf geben Richtung Freitag, Richtung Verfallstermin. Das kann sein, dass wir hier eine kleine Trendumkehr Richtung Saisonalität dann sehen. Was auch noch kommt, bitte nicht vergessen, 14:30 Uhr gibt es noch wichtige US-Daten, Frühindikatoren, die wir haben im Einzelhandelsumsätze, ganz wichtig für das BIP-Wachstum in den USA und den Philly-Fed-Index, der wichtigste Frühindikator überhaupt. Die dürfen sich nicht weiter eintrüben und Richtung Rezession schreien, denn der Fall der Inflation, das haben die Märkte eingepreist, darauf reagiert man so gut wie gar nicht mehr, der Aktienmarkt, aber eine Rezession, da ist man sich nicht ganz so sicher. Ne? Da hofft man immer noch, Soft Landing kommt noch, wenn die Daten zu schwach ausfallen, könnte das direkt negativ behaftet sein. Also gleich kommt das Kurzstatement, 14:15 Uhr. Ich poste dann alles live in den Trading-Chat, wenn ich Trading-Chat auch auf tradingportal.net, habe ich auch einen Live-Ticker, aber natürlich hier in den Chat von YouTube. Ich schaue gleich mal, das schreiben schon welche. Kein Bild schreibt einer, kann nicht sein. Hoffe ich doch zumindest, dass es funktioniert. Ansonsten schreibt bitte mal rein, wenn ihr mich nicht sehen könnt. Sollte eigentlich funktionieren und mich auch hören. Wie gesagt, ich schalte dann gleich aufs große Bild um zur Pressekonferenz, wenn sie in einer halben Stunde startet. Gleich kommt erstmal das Kurzstatement hinein, Begleittext, der vermutlich keine großen Änderungen mit sich bringen wird. 25 Basispunkte hoch. Wir bleiben immer am Ball, bis wir unser Ziel von 2% erreicht haben, der Inflation etc. Diese hawkische Ummalung, ähnlich wie bei der FED, der man es nicht richtig abkaufen möchte. Schaut gerne noch mein Market Briefing von heute Morgen an. Da bin ich da in 25 Minuten sehr detailliert drauf eingegangen, dass die Notenbanken ziemlich pokern und vermutlich das Pokerface nicht so gut ist. Dankeschön für das Feedback, das Bild etc. Funktioniert alles gut. Ich schalte um, ich poste dann, muss er den Ticker auch noch begleiten. Eventuell melde ich mich dann nochmal live zurück nach dem Kurzstatement und dann ab 14:45 Uhr hat dann Lagarde das Wort. Mal sehen, wie viel sie wieder ablesen wird, im Gegensatz zu vielen anderen Notenbankern, zum Beispiel Draghi, ne, der hat ja fast alles frei gesprochen, der war da etwas souverän. Lagarde hat da Sorge, vielleicht etwas Falsches zu sagen und liest nahezu alles immer ab und wird wieder sehr viel rumblättern. Nun gut, ich schalte mal um, wir sehen gleich das Kurzstatement. Vielen Dank und wir sehen uns im Chat. Bin ich nochmal. Ton ist nicht da, weil ich nicht geredet habe, ganz einfach. Und weil momentan natürlich der Stream noch nicht läuft. 14:45 Uhr beginnt die Pressekonferenz. Ich bin gerade ein bisschen am Durchschauen, den Begleittext anschauen. Also 25 Basispunkte war ja Konsens. Es sind aber einige interessante Punkte dabei, die es zu erwähnen gilt. Könnt mich verstehen, ich denke schon. Ja, die Prognosen für die Inflation 2023 sieht man sie jetzt bei 5,4%, 2024 bei 3,0% und 2025 bei 2,2%. Also das Inflationsziel von 2% sieht man bis 2025 nicht erreicht. Da große Hoffnung auf große geldpolitische Geschenke. Ja, das ist so ein Punkt, da sind die Märkte sicherlich etwas zu optimistisch unterwegs. Ja, den Zinsgipfel werden wir vermutlich bald sehen, aber geldpolitische Geschenke, davon sind wir wohl weit entfernt, weil die zugrunde liegende Inflation, Kerninflation, sehen Sie immer noch das Hauptproblem, ganz ähnlich wie bei der FED. Interessante Punkte auch. Was haben wir noch? Ich muss selbst ein bisschen live durchschauen, wurde gerade eben veröffentlicht. Auch nach oben korrigiert die Kerninflation. Also Kerninflation bleibt das Problem, aber das ist jetzt nichts Neues. Aber das ist was Neues, dieser Punkt hier. Zugleich wirken die bisherigen Zinserhöhungen des EZB-Rats stark auf die Finanzierungsbedingungen durch und schlagen sich allmählich Verzögerungseffekte in der gesamten Wirtschaft nieder. Kreditkosten sind stark gestiegen und das Wachstum der Kreditvergabe verlangsamt sich. Verschärfte Finanzierungsbedingungen, wesentlicher Grund, warum die Inflation weiter Richtung Ziel zurückgehen wird. Also erstmals die Maßnahmen der EZB schlagen auf die Konjunktur durch, auf die Kreditbedingungen durch, was dann auch interessant wäre für die Banken. Das ist schon ein bisschen der Hinweis, unsere Maßnahmen könnten uns in eine Rezession halten. Das ist auf alle Fälle ein neuer Punkt, der interessant ist und der für die Märkte auch spannend ist. Das Thema Inflation ist nicht mehr das Thema in diesem Jahr. Das ist nicht mehr das spannende Thema in diesem Jahr. Der Markt reagiert darauf kaum. Das ist ja eingepreist, dass es zurückgeht. Die Frage ist, gibt es Systemereignisse? Wie stark fällt die Rezession? Das wird so eine aus der Winterrezession, eine Sommerrezession. Diese Sorgen sehe ich durchaus, weil eben diese Verzögerungseffekte, von denen Jerome Powell gestern so viel erzählt hat und von denen Madame Lagarde heute auch erzählen wird. Und hier im Begleittext steht dies durchaus geschrieben, dass eben jetzt signifikant auch die Wirtschaft getroffen wird aufgrund der geldpolitischen Maßnahmen. Und die geldpolitischen Maßnahmen, die Zinsschritte von heute, ja, die werden wir erst im Herbst, im Winter spüren. Und dann sind die erst in der Konjunktur angekommen. Also diese Verzögerungseffekte sind nicht klein zu reden. Haben wir noch was Interessantes? Ich springe. Ja, das ist natürlich interessant, also keine Forward Guidance, also jetzt nicht festlegen, wie wir als nächstes reagieren. Wir schauen von Datensatz zu Datensatz. Eine Live-Session hat es gestern Jerome Powell genannt. Und wenn wir die nächsten Daten deutlichen Rückgang zeigen, gibt es denn keine Zinserhöhung. Man hält sich alle Türen offen. Vermutlich geht die Inflation auch zurück, auch aufgrund einer die Rezession ist in der Eurozone schon da geht die Nachfrage zurück. Da wird die Inflation weiter zurückgehen und wird man dann von Datensatz zu Datensatz schauen und dann reagieren, bis wir unser Ziel von 2% erreicht haben. Ähnlich wie Jerome Powell hält sich die Türen offen, aber vermutlich werden die Schritte kleiner. Ein Zinsschritt vermutlich noch und dann der nächste. Weiß ich nicht. Also ich glaube, im Sommer sehen wir den Gipfel und die Tür öffnet man sich quasi mit den ersten Aussagen hier. Finanzierungsgeschäfte laufen aus, sicherstellen 2% reibungslose Funktionalität der Geldpolitik. Okay. Ja, das sind die Punkte. Das ist das Kurzstatement, also geliefert wie bestellt, möchte man sagen. Aber eben der Hinweis, dass die Kerninflation das Problem ist, dass die Teuerung allmählich erst zurückgehen wird, also dass der Gipfel aber nahe sein wird, weil man von Datensatz zu Datensatz schaut, live schauen möchte, aber die Wette, dass man sehr zügig Zinssenkungen sehen wird, geldpolitische Lockerungen, das ist ein Problem, dass die Märkte in meiner Meinung nach nicht real einpreisen. Sie preisen zu früh deutliche Senkungen ein, dass man von dieser restriktiven Politik, konjunkturdämpfenden geldpolitischen Maßnahmen wieder auf stimulierende Maßnahmen zurückfallen. Das müssten wir ja eigentlich, wir sind in einer Rezession. Normalerweise würden wir jetzt keinen Zinsschritt auf der Oberseite sehen, sondern auf der Unterseite. Wir machen das Gegenteil. Und die Verzögerungseffekte, passt auch in der Pressekonferenz darauf auf, ähnlich wie Powell wird auch Lagarde darauf rumhacken und die Märkte reagieren da noch nicht wirklich drauf, sollten es aber in den Fokus rücken, weil die Verzögerungseffekte uns in einem sehr schwachen Wachstum 2023 halten werden, was nicht ganz zu dem Optimismus an den Märkten passt. Die erste Reaktion beim DAX, der bleibt unter dem Allzeithoch, aber erste Reaktion ist noch nicht vielsagend. Die Pressekonferenz bringt sicherlich noch einige Schwankungsbreiten mit sich. Ja, das war das kurze Feedback zum Begleittext. Wie gesagt, ist schon, also ich muss kurz in euren Chat mit reinschauen. Also Ton funktioniert hoffentlich, geliefert wie bestellt, habe ich eben schon gesagt. Aber eben durchaus, dass man von Sitzung zu Sitzung schaut, dass man jetzt so Konjunktursorgen sieht, weil die Maßnahmen in die Konjunktur ankommen, wird relevant sein und eben die hohe Kerninflation. Ich schalte jetzt gleich wieder zurück, denn die Pressekonferenz, der Livestream beginnt meistens 5 Minuten eher. Jetzt ist er noch nicht drin, aber sollte dann beginnen. Ich werde dann live moderieren im Chat, in deutscher Sprache werde ich die Keywords, die Keynotes damit liefern und ja, das sollte der erste Eindruck gewesen sein. Der Markt, ja, ziemlich eingepreist alles, aber er schwächelt etwas hin, aber die Konsolidierung, wie schon mehrfach gesagt, war sowieso überfällig. Es darf nur keine starke Abwärtsdynamik geben. Gleich ist der Ton vermutlich wieder weg, wenn ich es umschalte, wieder auf den Livestream. Aber rechtzeitig aktiviere ich den dann, sonst hätten wir die ganze Zeit hier irgendwelche komische Fahrstuhlmusik. Das braucht es nun auch nicht. Also das war's von mir. Wir sehen uns gleich im Chat. Ich liefere dann die Keynotes. Vielleicht melde ich mich danach nochmal. Wir werden sehen. Vergesst bitte Abo und Like nicht, damit sich dieser Aufwand hier ein bisschen lohnt. Und der YouTube-Algorithmus, ja, denkt auch, dieser Kanal ist spitze. Und da hat der YouTube-Algorithmus sicherlich auch recht. Also bis gleich im Chat.
Good afternoon and welcome to our press conference. I'm joined here on stage by President Lagarde and by Vice President de Guindos. My name is Wolfgang Preußel. We are, as always, in a hybrid format, so I also welcome those who are following via video. When you have a question, please turn on your camera and the microphone so we can hear and see you. And with that, I hand over the floor to President Lagarde. Please.
Thank you very much and good afternoon to all of you. The President and I welcome you to our press conference. Inflation has been coming down, but is projected to remain too high for too long. We are determined to ensure that inflation returns to our 2% medium-term target in a timely manner. The Governing Council, therefore, today decided to raise the three key ECB interest rates by 25 basis points. The rate increase today reflects our updated assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission. According to the June macroeconomic projections, Eurosystem staff expect headline inflation to average 5.4% in 2023, 3% in 2024, and 2.2% in 2025. Indicators of underlying price pressures remain strong, although some show tentative signs of softening. Staff have revised up their projections for inflation, excluding energy and food, especially for this year and next, owing to past upward surprises and the implications of the robust labour market for the speed of disinflation. They now see it reaching 5.1% in 2023, before it declines to 3% in 2024 and 2.3% in 2025. Staff have slightly lowered their economic growth projections for this year and next. They now expect the economy to grow by 0.9% in 2023, 1.5% in 2024, and 1.6% in 2025. At the same time, our past rate increases are being transmitted forcefully to financing conditions and are gradually having an impact across the economy. Borrowing costs have increased steeply, and growth in loans is slowing. Tighter financing conditions are a key reason why inflation is projected to decline further towards our target, as they are expected to increasingly dampen demand. Our future decisions will ensure that the key ECB interest rates will be brought to levels sufficiently restrictive to achieve a timely return of inflation to our 2% medium-term target, and will be kept at those levels for as long as necessary. We will continue to follow a data-dependent approach to determining the appropriate level and duration of restriction. In particular, our interest rate decisions will continue to be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. The Governing Council confirms that it will discontinue the reinvestment under the Asset Purchase Programme as of July 2023. The decisions taken today are set out in a press release that is available on our website. And I will now outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. Looking at the economic activity, the euro area economy has stagnated in recent months. As in the fourth quarter of last year, it shrunk by 0.1% in the first quarter of 2023, amid a drop in private and public consumption. Economic growth is likely to remain weak in the short run, but strengthen in the course of the year as inflation comes down and supply disruptions continue to ease. Conditions in different sectors of the economy are uneven. Manufacturing continues to weaken, partly owing to lower global demand and tighter euro area financing conditions, while services remain resilient. The labour market remains a source of strength. Almost 1 million new jobs were added in the first quarter of the year, and the unemployment rate stood at its historical low of 6.5% in April. The average number of hours worked has also increased, although it is still somewhat below its pre-pandemic level. As the energy crisis fades, governments should roll back the related support measures promptly and in a concerted manner to avoid driving up medium-term inflationary pressures, which would call for a stronger monetary policy response. Fiscal policies should be designed to make our economy more productive and gradually bring down high public debt. Policies to enhance the euro area's supply capacity, especially in the energy sector, can also help reduce price pressures in the medium term. The reform of the EU's economic governance framework should be concluded soon. So looking at inflation now. Inflation fell further to 6.1% in May, according to Eurostat's flash estimate, from 7% in April. The decline was broad-based. Energy price inflation, which had risen in April, resumed its downward trend and was negative in May. Food price inflation fell again, but remained high at 12.5%. Inflation, excluding energy and food, declined in May for the second month in a row to 5.3% from 5.6% in April. Goods inflation decreased further to 5.8% from 6.2% in April. Services inflation fell for the first time in several months from 5.2% to 5%. Indicators of underlying price pressures remain strong, although some show tentative signs of softening. Past increases in energy costs are still pushing up prices across the economy. Pent-up demand from the reopening of the economy also continues to drive up inflation, especially in services. Wage pressures, while partly reflecting one-off payments, are becoming an increasingly important source of inflation. Compensation per employee rose by 5.2% in the first quarter of the year, and negotiated wages by 4.3%. Moreover, firms in some sectors have been able to keep profits relatively high, especially where demand has outstripped supply. Although most measures of longer-term inflation expectations currently stand at around 2%, some indicators remain elevated and need to be monitored closely. Turning to our risk assessment now. The outlook for economic growth and inflation remains highly uncertain. Downside risks to growth include Russia's unjustified war against Ukraine and an increase in broader geopolitical tensions, which could fragment global trade and thus weigh on the euro area economy. Growth could also be slower if the effects of monetary policy are more forceful than projected. Renewed financial market tensions could lead to even tighter financing conditions than anticipated and weaken confidence. Also, weaker growth in the world economy could further dampen economic activity in the euro area. However, growth could be higher than projected if the strong labor market and receding uncertainty mean that people and businesses become more confident and spend more. Upside risks to inflation include potential renewed upward pressures on the cost of energy and food, also related to Russia's war against Ukraine. A lasting rise in inflation expectations above our target or higher than anticipated increases in wages or profit margins could also drive inflation higher, including over the medium term. Recent wage agreements in a number of countries have added to the upside risk to inflation. By contrast, renewed financial market tensions could bring inflation down faster than projected. Weaker demand, for example, due to a stronger transmission of monetary policy, would also lead to lower price pressures, especially over the medium term. Moreover, inflation would come down faster if declining energy prices and lower food price increases were to pass through to other goods and services more quickly than currently anticipated. Let's look at the financial and monetary conditions now. Our monetary policy tightening continues to be reflected in risk-free interest rates and broader financing conditions. Funding conditions are tighter for banks, and credit is becoming more expensive for firms and households. In April, lending rates reached their highest level in more than a decade, standing at 4.4% for business loans and 3.4% for mortgages. These higher borrowing rates, together with tighter credit supply conditions and lower loan demand, have further weakened credit dynamics. The annual growth of loans to firms declined again in April to 4.6%. The month-on-month changes have been negative on average since November. Loans to households grew at an annual rate of 2.5% in April and increased only marginally month-on-month. Weak bank lending and the reduction in the Eurosystem balance sheet led to a continued decline in annual broad money growth to 1.9% in April. Month-on-month changes in broad money have been negative since December. In line with our monetary policy strategy, the Governing Council thoroughly assessed the links between monetary policy and financial stability. The financial stability outlook has remained challenging since our last review in December 22. Tighter financing conditions are raising banks' funding costs and the credit risk of outstanding loans. Together with the recent tensions in the US banking system, these factors could give rise to systemic stress and depress economic growth in the short run. Another factor weighing on the resilience of the financial sector is a downturn in the real estate markets, which could be amplified by higher borrowing costs and a rise in unemployment. At the same time, euro area banks have strong capital and liquidity positions, which mitigate these financial stability risks. Macroprudential policy remains the first line of defense against the buildup of financial vulnerabilities. So in conclusion, inflation has been coming down, but is projected to remain too high for too long. The Governing Council therefore today decided to raise the three key ECB interest rates by 25 basis points in view of our determination to ensure that inflation returns to our 2% medium-term target in a timely manner. Our future decisions will ensure that the key ECB interest rates will be brought to levels sufficiently restrictive to achieve a timely return of inflation to our 2% medium-term target and will be kept at those levels for as long as necessary. We will continue to follow a data-dependent approach to determining the appropriate level and duration of restrictions. In particular, our interest rate decisions will continue to be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. In any case, we stand ready to adjust all of our instruments within our mandate to ensure that inflation returns to our medium-term target and to preserve the smooth functioning of monetary policy transmission. And we are now ready to take your questions. Thank you.
Thank you, President Lagarde. And the first question goes to Balazs Korani of Reuters. Balazs, please.
Good afternoon, President Lagarde.
Good afternoon.
6 weeks ago, you provided a fairly similar guidance in your statement, and in the press conference, you said there's more ground to cover and the ECB is not pausing. So my first question is that if you have a similar guidance, are you willing to make the same comment in the press conference today? The second is, I wanted to ask you, what lessons do you draw from the Fed's pause? And I don't mean that you need to emulate the Fed. Clearly, the ECB has its own policy, but I mean the reasons behind the pause, as in quite a lot has been done, and there needs to be an evaluation of the effects of policy tightening. So do you see a reason for the ECB to contemplate a similar pause? And is there a risk that focusing on past projection errors could increase the risk of a policy error by the ECB?
Thank you very much for your two questions, as I understand. So on your first question, this meeting was the meeting of a Eurosystem projection exercise. So we have looked very much at data. We have revised our projection, and we have essentially did what we said we would do. Data dependent, and using the three elements of our reaction function to determine what was the right decision today. And that is the reason why we increased all three rates by 25 basis points. Are we done? Have we finished the journey? No. We're not at destination. Do we still have ground to cover? Yes, we have ground to cover. And I can even go further than that. I can tell you that bearing a material change to our baseline, it is very likely the case that we will continue to increase rates in July, which probably doesn't come as a big surprise to you, but that's what I'm telling you. And this is so because we are determined to reach our target in a timely manner and to continue to apply the principles that we have applied today. Data dependency, the three elements of the reaction function, and moving meeting by meeting. Now, obviously, we are better informed at each projection meeting, which happens, as you know, in June, in September, and later. To your second question, I don't know what difference to make between a pause and a skip, and I have not studied enough the press conference of my friend and colleague, Mr. Powell. But as far as the ECB is concerned, I said what I said. We have hiked interest rates. Unless there was a material change to our baseline, we will continue to hike at our next meeting. So we are not thinking about pausing, as you can tell. Thank you.
Thank you, Madame Lagarde. And the next question goes to Annette Weisbach of CNBC. Annette, please.
Thank you very much. I have two questions. One, I'm here for, it's different this time. I would like to ask you about what do you need to see for core inflation actually coming down, so it may give you the possibility to pause or to skip or to whatever you want to call it in September over the summer period. So what needs to happen? And then I have a question on the financial conditions. You're saying that they are forcefully tighter. So at what would you make rethink that it's enough when it comes to tight financial conditions? Thank you.
Well, thank you very much for your question. I wish I could give you the very simple answer where I say when we are there and when financing conditions is such and the tightening has reached that level for corporate, for mortgages, but unfortunately it doesn't work like that, because what we know is the target that we have, which is price stability as defined by the 2% medium term, added to which we want to be confident that it stays at that target of 2%, which is why duration matters as well. But it is going to be a factor of those three elements that we will be looking at. So it's the inflation outlook, which is every month and every 3 months in particular, informed by all the new financial and economic data that we receive. It's the underlying inflation and the dynamics of it, and I can assure you that we look at multiple cuts and subset of inflation to arrive at what is the corest of the core, because we don't limit our review at core. We go further than that. We look at stripped, superstripped, PCCI. I mean, there's a whole variety of the prices and the inflation that we look at. And we need to see that, we need to be confident that it is heading down. For the moment, we have some of those measurements declining a bit, some of those sort of stable, and others still going strongly. And the third component is the strength of transmission, which we measure at each and every step of the way, from the market rates, bond prices, credit by banks, banking funding, and then to the economy, which is how we refer to the 4.4 and 3.4 loans to corporate and households, because that's how it is transmitted, and ultimately to inflation. So that's the path that we want to see delivering, so that we head towards our target. That's what we have done, that's what we will do, and we will stick to that methodology. Thank you.
Thank you. Thank you very much. Next question to Alexander Weber of Bloomberg News. Alexander, please.
Good afternoon. Thanks very much.
Good afternoon.
I was wondering, how alarmed are you about the upward revision to the 2025 inflation outlook? And doesn't it mean that the 3.75% terminal rate that was generally expected, at least until recently, isn't going to be enough? And then secondly, you've alluded to the strength of the labor market and the impact that wages are having on inflation. Do you think you can achieve the 2% inflation target with unemployment remaining as low as it is now, or does it have to go up?
So your first question referred to the core inflation revision that we have decided for 2024. That's what you referred to? Yeah. Sorry, 25. Well, I think we revised actually all three. We revised 23 and 24, and ultimately the 2.3, which moved by 0.1 from the previous projections. I think on the basis of that, you can easily conclude that we're not satisfied with the result of that inflation outlook, which is only one of the three components that we look at. And that is the reason why we are making the monetary policy decision that we make today, and why we are thinking that unless there was a material change to the baseline, we would again hike interest rates in July. I don't want to comment about the terminal rate. This is what markets are considering. The terminal rate is something that we will know when we get there, because it is not what is driving our analysis and our deliberations. What is driving it is the ultimate destination, which is the 2% inflation. That's what we want. And there are lots of components that come in to help us arrive at the 2% target. We spent a lot of time on the labor market, We spent a lot of time because it is becoming one of the major components of the drivers of inflation. You know, it was energy for a long time, to sort of oversimplify. Energy played a significant role, then food kicked in, and energy is now fading, has moved now in May in slightly negative territory. But labor, and wages in particular, is playing a significant role as a driver of inflation. And it's quite extraordinary because there have been more people employed. The average hours have been up. Wages are increasing. You know, we had 5.2% for the first quarter in the negotiated wages. And the output is where it is, stagnant. So there is an issue of unit labor cost, in other words, productivity, which clearly has an impact on inflation as well. So we will continue to really monitor and dissect as well as we can this entire enigma of the labor market, which is, as I said, playing a critical role. And it's especially important because it is many services which are playing a large part in our economy are labor intensive, and wages in that respect play a key role. That is partly, by the way, the reason why we have, I was going to say upgraded, but it's not upgraded, but we have increased our projection for core inflation in both 23 and 24.
Thank you, Madame Lagarde. And the next question goes to Jan Merlin of Handelsblatt. Jan, please.
Thank you. Good afternoon, Madame Lagarde.
Good afternoon.
My first question, I was a bit surprised by how strong this revision of the core inflation projection was. Could you elaborate a bit on the reason? Is that all due to wages, wage expectations, or are there other reasons behind that? Yeah, and my second question is about the decision today. Was it unanimous? Could you maybe give us a bit of a flavor about the discussion? Thank you.
Sure. On the first one, our revision to core inflation, I've started answering already in the previous question. A lot of it is attributable to the unit labor cost. That's a large chunk of the revision. The rest is what you have in the monetary policy statement, which is past upward surprises. So it's a different starting point, which is informed by data that came in after the last projection that we made in March. The latest data that we had in terms of inflation was from January. Now, things obviously changed between those January data and the May data that we have incorporated, because we cut off at the 23rd of May. So I think that's a small part of it. The large part of it is the unit labor cost. And you asked me about the decision and the atmosphere. I have to tell you that it was quite a harmonious discussion and a very good and thorough economic discussions. As I said, we went really deep into the analysis of the labor market and tried to really understand the forces behind inflation to better fight it. And it was a very, very broad consensus.
Thank you. Next question goes to...
And by the way, I just want to remind that it was a twofold decision. It was, number one, the 25 basis points, but it was also the decision or the confirmation that we would stop any reinvestment under the APP.
And now Aude Kerselek of BFM Business. Aude, please.
Thank you for taking my questions. What does the ECB knows about lag effects? What takes longer to transmit into the economy? What are you looking at more closely? And second question about your targets. According to projections, you do not expect to reach the inflation target in the next 3 years. Some economists suggest that this target is no longer valid, that 3% will be the new 2%. What do you have to say about that?
We have a target. We have agreed on the target. We are in the middle of that fight against inflation. and this is what we know. We're going to get to that 2% and we're going to reduce it to 2%. What happens next is another story, but we want to be at target and we want to be confident that it remains at target. So the two elements are going to really drive our monetary policy going forward. You had the first part in your question, and I apologize. Oh yeah, the lag time. You know, we know that there is lag time, that the decisions that we have made in the last soon to be a year, which are monumental by all accounts, both in terms of speed, in terms of height, volume of hikes, if you will, and we are seeing some effects. We are seeing it in market rates, we are seeing it in banking financing, we're seeing it in credit, both in volumes and in rates. And there is some lag time. Not that much by sort of textbook standards, which will typically say that it's anywhere between 18 and 24 months, maybe a bit more. But because it is so unprecedented and such an exceptional situation, we really have to monitor that very carefully, and whether it is going to be faster, whether it is going to be a bit more slow, because there has been variation in the terms of loans, for instance, to both corporate and mortgages, and therefore the transmission is not operating as smoothly as it would if everything was at floating rates. All of that we are looking at extremely carefully to measure the transmission and see how fast it moves. But suffice to say that we are seeing it already. Do we see all of it? Obviously, no. We want to see it all the way down to inflation. Thank you.
Thanks. Next question to Martin Arnold of the Financial Times. Martin, please.
Hello, Madame Lagarde.
Hello,
Two
Martin.
questions from me. Firstly, the Bank of Canada recently restarted its rate hikes, saying that the reason for this was it thought the neutral rate had risen from its previous expectations. Do you think similarly, and is that part of the reason that you're continuing to raise rates and signal more rate rises are ahead? The second question is about whether the ECB could consider skipping rate rises, certain meetings, perhaps going to only changing policy when you're issuing forecasts, similarly to the Fed's pause or skip yesterday. Thank you.
But thank you very much for your two questions. You know, it's difficult to say whether we're in the same position as the Bank of Canada because we did not pause. So in a way, we don't have to ask ourselves whether we are at neutral rate or not. We believe that we have ground to cover, so we are not where we want to be if we want to reach our target. And in terms of having to pause or having to skip, as I said, number one, we have not discussed it at all, and we have not begun thinking about it because we have work to do.
Thank you. Thank you, Madame Lagarde. And the next question goes to Isabella Bufacchi of Il Sole 24 Ore. Isabella, please.
Good afternoon, and thank you for the opportunity. I have two questions. The first question is, today you repeated that rates will be kept at restricted levels for as long as necessary. And because inflation will be above 2% in 2025, we can expect restrictive rates for long. So how is the Governing Council concerned that you're going far and you at the same time would like to avoid unnecessarily harming economic activity? How far do you look at growth weakening in response to your policies? And then a second question is on this June, that is an historical month for the ECB. The 477 billion repayment of TLTRO is seen as the biggest daily reduction of the ECB balance sheet. And on the top, this June is also the last month of APP reinvestments. So what is the impact of these two unprecedented events, let's say in the ECB, on impact on tightening of financing and monetary conditions? Thank you.
Thank you very much. I thought you were going to say that it's an important month because we are celebrating our 25th anniversary, which was also the date when the ECB was opened first on the ground here in Frankfurt. So, as I said, the objective that we have is very clear. The destination, we know. The journey to get there is not over, and we have ground to cover. So we will be as restrictive as long as needed in order to make sure that we reach that destination. Under the current parameters, 2.2% in 2025 is not satisfactory, and it's not timely. Which is why we're making the decisions that we are making today and later on. So on the, at the end of June and in the first days of July, banks will reimburse 477 billion euros that they had borrowed under TLTRO, which was this very special facility that we had put in place to help the financing of the economy at the time of the pandemic. Those loans were granted for periods of 3 years, and there were various operations in the course of the pandemic. The repayment, which is coming due now, is known and has been known for a long time. Actually, it was so well known that it should have been a lot higher than that, but we took measures in order to avoid that we had this sort of cliff effect of a massive reimbursement, which would have exceeded 1 trillion euros. But banks know about it, they have known about it, they have done their funding plans in order to respond to the situation. And in any event, we have the normal facilities available, whether it's MRO or LTRO, if that was ever needed, just in case. The APP reinvestment will be completed at the end of June, and we will let runoff take place as of July. We have experienced that sort of partial reinvestment for now a few months, because it was decided back in March. It has been well absorbed by markets. We have not observed any disruption, and given the amounts that we are talking about, we have reasons to believe that it should be absorbed also in a smooth manner. But of course, we will be very attentive. We will look at this process, and we will, as I said, always have the means to take action and to use all the tools that we have available if it was needed. Thank you.
Thank you. And the next question goes to Klaus Rainer-Jackisch of ARD Television. Klaus Rainer, please.
Thank you very much. Good afternoon. Mrs. President, you've touched on the problem of the wage increases. At your speech at the European Parliament, you touched on the problem of corporate profits. If you take these both together, how confident are you that the relevant parties actually start to moderate on this, in particular as both of them start to criticize that interest rates are already too high? And the second question, I'm also a bit puzzled about the really severity and persistency of this core inflation. May I ask you as well, please, to elaborate a little bit more where the Governing Council sees the reason for this really strong persistence? Thank you very much.
Yeah, thank you very much. The labor market situation and the employment situation is the good news in Europe. And we have never seen an unemployment rate be so low. Actually, in our forecast, we see unemployment rate go from this 6.5% that we have now to 6.3%. So we see that level of unemployment continuing to decline. We also see wages continuing to increase in the future. Now, you really asked me specifically the question of whether corporate and labor, and I'm using that term in a generic, comprehensive way, will find the terms under which they don't contribute to fueling even more inflation that would call on us to take harder monetary policy measures. This is the assumption that we make. I think economically it is justifiable, it is rational, but of course humans are humans, and it's going to be for the parties around the table to actually determine what they do going forward in terms of allocating profits and organizing these social relationships. What they can be certain of in their discussion is that the European Central Bank will take all necessary measures to return inflation to 2%. That they can count on. And we are confident that we will get there. So I hope it helps in their deliberation going forward. The persistency of inflation, as I said, has a lot to do with this unit labor cost that I have mentioned earlier on. And this is really the strong, I don't want to use sticky component because it is going to be persistent and we know it. And numbers will continue to be high in the months to come, by the way, because we believe that services are going to continue to go strongly. Labor-intensive services will, contact-intensive services will continue to go strongly. We're heading into the summer. All the summer activities, whether it's transportation, whether it's hospitality, whether it's vacation, all of that is going to go well. So that persistence is to be expected in the short run. And there will be remaining persistency going through into 24. It declines in 25, and we have not revised upward significantly for 25 because we believe that other elements will kick in, which will reduce inflation numbers. It's and unless risks were to materialize, but under the baseline, energy costs are going to continue to, or the cost of, the indirect effect of energy costs will continue to fade. You can still find them in prices, but it is going to gradually fade out. The same goes for food. And we expect that resistance of inflation to gradually fade away. And as much as it persists, we will persist.
Thank you. And the next question goes to Andres Stumpf of Expansion. Andres, please.
Good afternoon, Madame Lagarde. You have delivered quite a strong message about wages, and I'm a little bit scared. Has the risk of an inflation spiral increased since March? And second question about the projections. If 2025 is not acceptable, do we need to see 2% inflation in 2024 to the ECB to consider that the objective will be achieved in a timely manner? Or what is exactly a timely manner? Thank you.
Well, first of all, on wages, we are not seeing second round effect. We're not seeing this wage price spiral. The only thing that I'm trying to say here is that we have to avoid what I have called the tit for tat, where in response to inflation, both corporates and labor want to receive full compensation, which obviously would possibly lead to that second round effect that I was alluding to. Obviously, the sooner the better in terms of when do we bring inflation back to 2%. But we have to be also realistic, and we have to be measured in the response that we give, but very determined in the delivery of those measures, and persistent.
Thank you. And the next question goes to Jean-Philippe Lacour of AFP via WebEx. So Jean-Philippe, please turn on your camera and your microphone. We cannot hear you, Jean-Philippe. Try again.
Yes.
Yes, now.
Thank you for giving me the opportunity, but I'm afraid that my question was already asked. It was on this wages, and if you see a wage price spiral, the ECB wants to avoid, you said not, but it's a bit a thin difference. You said the wages are having a huge impact on inflation on one side, that's what you say, and on the other side you say that there is no kind of wage price spiral, so it's not really clear to understand. Can you maybe give us an explanation on how you can come to this conclusion?
We just all wish that everything was clear and simple, wouldn't we? What I said, and thank you very much for your question, what I said is that unit labor cost, which is slightly different than wages, negotiated wages, however you want to measure it, but unit labor cost is having an impact, or is rather causing the revision of core inflation projection. That's what I'm saying. And you can certainly have that projection and at the same time acknowledge that today we are not seeing any spiraling of wages and prices that would cause this second round effect that we would be very concerned about.
Thank you. And now to Javier Luengo of Negocios TV. Over to you, please, Javier.
Hi, can you hear me?
Yes.
Okay, thank you for taking my question. You said that the financial markets are not feeling the impact of the balance sheet reduction. Do you expect to be able to increase it on July onwards? And do you think you have room to reduce it?
You know what, I'm going to ask you a favor. If you could repeat your question. The only thing I heard was something that actually I didn't say, but you said I said, which was financial markets will not react to the end of APP.
Reduction.
Yeah, but then,
I don't know if do you think that you have room to reduce it further?
To reduce it further?
Further, yeah.
Well, you know, we two things. One is the TLTRO reimbursement that is falling due at the end of June, which was anticipated, known by all parties involved, is taking place at the end of June and in early July. It will, as a result, reduce the balance sheet of the ECB by 477 billion euros. The second part of the decision that we made today was to stop reinvesting redemptions under APP and let APP move into a runoff mode. That's all we decided. And that means that, for instance, the PEP continues as was indicated in the only part of forward guidance that we still have in our monetary policy, which is until 2024. We continue the reinvestment and we apply flexibility if and where it is needed. There's no plan to change that.
Thank you very much. That concludes our press conference today. Thank you very much for following. Our next press conference is on 27 July, and up until then, all the best. Thank you. Bye-bye.
Thank you.